Hello guys, welcome to my YouTube channel, Technical Analysis, the Unbiased View. So let's finish up quickly a video on two stocks. One is Vedanta and other one would be SRF. Starting with Vedanta, this is Vedanta's daily chart, cash chart. So you can see that there was a uptrend channel in Vedanta and it was resuming very nicely to that uptrend channel. However, with the market, it broke the uptrend channel along with the cloud 60 moving average and 200 moving average. So the black color thread, this thread is our 200-day moving average, and this blue, violet, whatever kind of a this thread is our 60 EMA, 60 exponential moving average. So as of now, you can see that after breaking the long uptrend channel, Vedanta is forming an ascending triangle, correct? It is forming an ascending triangle after the breakdown of uptrend channel. This would call as a neckline of this ascending triangle, and this is obviously the ascending trend of the triangle. Within the triangle, you can see that with respect to the Friday's closing, Vedanta is it is in the conjunction between the 200 and 60 exponential moving average. So 200 moving average within the triangle is treating it as a resistance, and this particular 60 exponential moving average within the triangle is treating as a support. Other than this 60 moving average, the cloud is also extending the support. So how we will form the trade for the long term, short term, mid term, or whenever it exits the pattern either sides. So the one would be if it's cracked down. For example, let's think that if it is cracking down, first it will break the ascending triangle. Second, this area is very important area because after breaking this area, it has got a very important 50% mark of the Fibonacci, right from this trend to this trend. So it has got a very important mark to Fibonacci, and as you can see that there is some sort of support in the past also, which it took at this particular junction. It went up, it retraced, it took the support along with the cloud, right? There was a confluence between the cloud 60 moving average and the 50% of the Fibonacci. It took a beautiful support from there, and again it pulled back very nicely. So if it's cracked down the ascending triangle, if it cracks down further the 50% over here, the 50% of Fibonacci, and it cracks down the cloud also, it breaks down the cloud also, right? Then there would be a severe cuts, and the first support would be 61.8% golden ratio. That is one. Second, what if it breaks out the 200 exponential moving average? Along with that, it breaks out the support and resistance. Right now, it is resistance of 38%, and it will go and first touch the neckline. So if it is closing above 200 exponential moving average, and if it is closing above 38.2% of Fibonacci, so we can keep this as a stop loss, and within the triangle you can have a trade setup for the target up to this particular neckline. And if it closes above it breaks out above the neckline during the market or at the closing, then again you can have a low of a near term previous day or day before yesterday of that particular candle, and you can have that low as a or neckline as a stop loss and go for the 351 kind of a target. So there is a good opportunity which I see in Vedanta. So we can plan in advance, keep the chart ready, and hunt whenever there is an opportunity or exit of a price action either sides. So on the upside, we have got two opportunities above 200 moving average plus 38. So we'll keep 200 moving average as a stop loss on a closing basis. If it is closing below 200 moving average, that would be a stop loss, and our target would be the neckline. And as I said in the beginning, if it is breaking down the 60 plus ascending plus 50 plus cloud, then there will be a severe deep cuts, right? So either side we have an opportunity in Vedanta. So this is Vedanta. The second, in this bearish market where there is everywhere, there's a haywire, attention kind of environment. I see SRF a very bullish pattern. So it has formed a right angle ascending broadening wedge. This is what we called as a right angle ascending broadening wedge, and 200 2010 to 2030 is a very fine baseline for this particular right angle broadening ascending wedge pattern. Within this broadening wedge pattern, you see that we have a support resistance band also available at 2272. Correct. Again, if you see above this 2272, you have got a 60 moving exponential average, right? So this is again this blue color is your 60 moving exponential moving average. This black thread is your 200 moving exponential average. Plus, there is a good formation of cloud, right? Now, what's interesting in this is there is a crossover happening in the future Kumo, right? So if it comes retrace and takes the support and go up, then it will touch this particular ascending trend line, correct? So this particular crossover of the future Kumo is going to tell us a lot about the future trading setup. Similarly, like how we discussed in Vedanta, if it breaks down the 16 moving exponential moving average, it breaks down the 200 moving exponential moving average, and also it breaks down this important support come resistance band of 2272. For sure, you can go for a short, and this would be your target. All right. However, as of now, within the right angle ascending broadening wedge pattern, it has got a very three strong support: 60, 200, cloud, and 2272. Correct. So if it touches this particular ascending trend line, look for such kind of a negative divergence like this to book your profits and reverse your trade. And if it breaks down all this three and it touches the baseline, look for such kind of a positive divergence to book your profit and reverse the trade. Right? Obviously, with respect to the price action, you can wait for a day or two and look for a fully convinced kind of a price action. So these are the two stocks, SRF and Vedanta, where there is a clean setup available to trade, right? Wait for the right opportunity. If it's closing below the 60 moving exponential moving average, don't go short immediately. Let it break the 2272 area. Correct, because it has got a cloud 200 moving exponential moving average plus this important support come resistance band. So there are possibilities where it will come and take a sharp pullback. Only if it is closing below, you can keep somewhere here as a strict stop loss and go for the baseline as a target. But if at all it touches the baseline as a target, look for such kind of a divergence to book your profit and reverse that trade, right? So these were these are the two stocks which I would wanted to discuss with you. So thank you for watching technical analysis, the unbiased view. I hope you can make use of this information. Bye bye. Have a great day.